Welcome, ladies and gentlemen, to Commodity TV and our online interview editions now today with Sandeep Singh, the CEO of Osisko Gold Royalties. And of course, we want to get an insight and update on the company. Sandeep, good morning to Canada. How are you?
Very good, Jochen. Good to be with you.
Nice to talk great. Again. Yeah, perfect. And thanks for taking the time. And yeah, of course, there are a lot of good things happened with Osisko Gold Royalties lately. So it's time to do an update. First of all, I want to talk about shortly your Q3 numbers as they looked really exciting.
Yeah, no, we had a great Q3. So obviously everyone's aware that Q2 was the COVID impacted quarter. In Q3, most, if not all of our miners were back at full strength. And we got the benefit of that. I think we produced about 16.7 thousand ounces in the quarter. We had record cash margins of just over 96%. So it was a nice bounce back into a really good gold price. So nice to be making those free cash flows, and frankly sets us up for a really good Q4 as well. So Q3 was good, bounced right back after COVID. Q4 should be better, which sets us up with the potential to be at the high end of our guidance for the year.
That's fantastic. And when I see those big cash margins, any chances to get a higher dividend next year?
You know what? We are currently the highest dividend paying company in the royalty sector. We like being that way. There's others trying to catch up, but they're still playing catch up. So it's an important part of our business. We want to distribute cash flow back to shareholders. We went through a phase, and I'm sure we'll talk about it, Jochen, where we were spending some money on a development asset that's now gone. So that further makes our dividend even more sustainable, and certainly when we feel like we can, we'll look to grow that.
Super. Yeah, that leads to my next question, of course, Osisko Development. That's, your, how can I say that, reverse takeover spin-out company finally. And also you put in Caribou, and Caribou was one of the reasons of, let's say, a little bit of underperformance in 2019 and also parts of 2020 maybe in the beginning, because a lot of analysts thought, oh, Osisko is going back to start to play with the big toys and to go back to mining and goes away from the royalty. But I think this is now, spin out, and you are concentrating on your core business, I would say.
Yeah, look, I mean, the transaction had a lot of moving parts to it. It looks complicated, but at the core of it, it's not. We had the right assets in the company on the royalty side, and on the development asset side, the Caribou project, we just put them in the right places. So Osisko Development now is on its way to becoming a North American intermediate producer. It's well funded. It's done 2 large financings, which underscore the value of that company. And we've gone from having an active development asset, which was, making some people think of us as a hybrid, and then our multiple was getting affected. We now have a passive equity ownership, a significant one we think will grow significantly from here. But we've cleaned up our company, simplified our company, reduced our G&A, and also gotten when both those assets in Osisko Development are in production, that will generate 20,000 ounces of GEOs of a stream to us, which is a massive asset that we basically got paid to take as opposed to having to buy. So the end result was positive. You're right, it was a tough year from a share price perspective, but I think we've set up the company well to succeed, both companies well to succeed, frankly, and get that re-rating, which the royalty portfolio absolutely deserves. We've got fantastic assets in that space. We deserve a better multiple. We think we're set up now to get it. And we're also going to get, we think, a lot of value from that Osisko Development story, which is run by Sean Roosen, who all your viewers and listeners would know. He's pushing that mining story aggressively. And I'm telling a much simpler royalty story. So I think it bodes well for both of us.
Fantastic. So that means how many percent is it, right? 88% still owns Osisko Royalties on ODV, right?
Yeah, so we contributed the asset. We kept royalties and streams on everything in that portfolio. And on day one, Sean raised $100 million in a bought deal that took our ownership down to 88%. In the first week of trading, Sean topped up the treasury again, raising about $85 million. So our ownership today would be about 80%. And what we've said is, look, our intent is not to own 80% of a public company that's not a well-functioning public company. We think there's a lot of upside. We want to get the benefit of those catalysts for our shareholders. But we will get reduced as Osisko Development finances itself. It still has a mine to build, or 2 mines to build for that matter. And then we'll also look to opportunistically take some money off the table. So right now they're well financed. They shouldn't need equity capital for quite a while. Anyone who's looking to build a position in that relatively liquid company is going to have to probably come talk to us. So we'll get diluted, and then we'll also take some money off the table at the right time. But rest assured, we see a lot of value in that story, and we want to make sure we capture it.
Fantastic. I saw also that you have now 138 royalties and streams. So where were the additions?
Well, largely from the Osisko Development portfolio. So everything we put in there, we took a royalty on. There's the Caribou project. Obviously, we already had a 4% royalty. We upped it to 5%. The San Antonio heap leach project that went into that asset, into that company, I should say, in Sonora, Mexico, is a great little high-grade heap leach. We have a 15% stream there, and also on other land packages that are earlier stage but prospective that went into that story. We kept a royalty on those. So it goes back to that kind of accelerator model of building out growth, which has been hugely successful to us. Bringing in the asset 100% obviously led to some confusion, but we have generated significant royalties and streams off the back of it. When you think about what 20,000 ounces of GEOs for long life costs right now in the sector, it's about $500 million. We got paid to take it. So the end result was positive. I think the place that we are right now as a company is positive, and we have a lot of catching up to do from a share price perspective. That's the opportunity really at this point. Yeah. If you think about it, Jochen, we were a $17 Canadian share price a year ago at $1,400 gold. We're barely a $15 share price today at 18 and change. And the portfolio is just exceptionally better and stronger than it was a year ago. So I think that's the phase that's in front of us, and hopefully we can go and capture that premium multiple again.
Yeah, I'm pretty sure to do so, but it's also a nice buying opportunity because, as you said, the stock compared to last year is really much cheaper as it was, and you're doing better, and you are growing, and you are doing much better. What is also of interest for me, let's assume that we do not face too many problems 2021 with COVID, meaning what's going on with your gold producing royalties, meaning where you get finally your ounces delivered. Is every mine in production now? And also, if you would have to do a projection for 2021, what would be your conservative assumption as a delivery to Osisko in GEOs?
Sure. All the mines are producing well. They're back to, in our view, pre-COVID levels, if not better in some cases. So the mining operations are doing well. I mean, our portfolio now has quite a few positive catalysts in it, which I'll get to in a second. In terms of 2021, we'll come out with guidance early in the year. We were on track for growth this year, significant growth this year. We'll be back on that track next year. So, we have the continued ramp up of our Eagle royalty, which is run by Victoria Gold in the Yukon. They're still getting to full run rate. That started this year. That will continue into 2021. In 2021 as well, we'll have our Mantos operation in Chile, which is going through a significant expansion, debottlenecking. That will grow. So, we like to think that we have the best organic growth pipeline in the sector. The ability to almost double, if not more than double, our production over the next several years. And that's happening naturally. Those are things we've already bought and paid for. So that's happening without us having to do a thing. And a lot of our development assets, which maybe were earlier stage a few years ago, are now maturing at a pretty ideal time from a gold market, at a time where they can raise equity capital. And so it's a good time to be us. So we expect a continued ramp up year over year and some pretty important catalysts within the portfolio.
Great. So where do you see, let's say, the main catalysts for 21? And as said, what would be a conservative assumption concerning the gold equivalent ounces deliveries?
Sure. So again, this year, I think when we revised it, the guidance was 63.5 to 65.5 ounces. Really, that's just because we missed a big portion of our ounces in Q2. So I can't give you a number yet until we actually formally come out with guidance, but it'll be significantly higher, kind of back along the lines of what we were up to before COVID hit. And the important catalyst in the year, obviously the Eagle ramp up, the Mantos expansion I mentioned, but obviously a huge catalyst for us is the Malartic underground. So I'm sure you and some of your followers have been keeping up to date with the Agnico and Yamana story there on the underground. Currently 10 million ounces of high grade, well, higher grade than what one of the miners is mining next door, but significant ounces underground beneath the most efficient mill in Canada. We've got a 3 to 5% royalty there. It's upwards of 4 when you aggregate it on the deposits. And Agnico and Yamana are coming out with a significant resource increase, we think, in February, as well as a PEA, so first set of economics on that. But the messaging from them has been tremendous, talking about it being a game changer, generational asset, multi-100,000 ounces of production for decades. So for us, it's a second flagship asset underneath our first flagship asset, and it's coming into focus in Q1. So that's a pretty material catalyst. It's not something that's in our consensus NAVs in a big way, and it's not something that we think is in our stock in a big way. But it is the best royalty in the sector, and it's only getting better. So that is a huge thing we're looking forward to, and it's really just right around the corner at this point.
Okay, fantastic. Thank you very much, Sandeep. That was a great update. Exactly what I expected, to be honest. And you guys do a great job. Really, congratulations on that. And you also came over that trouble with COVID-19 when mines had to shut down. But as I always say, when a mine has to shut down, then you produce it later. Very simple.
It's still in the ground, and the beauty of our business model is as long as it comes out of the ground, we get paid. So no, we appreciate the time, Jochen. Happy to update anytime. And I'll just recap by saying I think we fixed a lot of the things we needed to fix in 2020. I think we are set up to excel in 2021. Pretty catalyst-rich period. And if nothing else, we don't think we get paid or valued based on our current assets. So all the growth that I'm talking about is coming for free. So I think it's all that will sort itself out, and look forward to that in the new year. In the meantime, stay safe, stay healthy, and happy holidays to you and your listeners.
Thank you very much, Sandeep. Also to you, Merry Christmas. All the best for 2021. And of course, stay healthy. That's the most important thing.
Perfect. Likewise.
Thank you.
All right.
Ladies and gentlemen, that was Sandeep Singh, the CEO of Osisko Gold Royalties, and you heard it. The stock is still undervalued if we compare it to 1 year ago. The company had, of course, some problems with COVID-19, as everybody else, when mines had to close and to shut down. But as said, the gold is still in the ground, so delivery is just delayed by 1 or 2 quarters, and they are getting their deliveries. The Q3 was a record quarter, 96.4% cash margin. This is outstanding, and also for 2021, as Sandeep said, it looks much, much better. The guidance will come out quite soon, and we expect also many more ounces that there will be delivered. And I think the move with ODV, with Osisko Development, was the right move. Now Osisko Gold Royalties again is a straightforward and clean royalty and streaming story, and I would say you check out the company. Thanks for watching us, and bye bye from Switzerland.